We're here with David Burrows, continuing our discussion about North American large caps. Taking your questions, we have David in Truro, Nova Scotia on the line. David, what's your question for David?
My question for the guest tonight is Facebook. I had it, and it's been kind of drifting sideways up and down a bit. I let it go at 108. It doesn't have a dividend, and I was curious. There's talk that it could go 130, but I don't like chasing it. And I know everybody seems to be on Facebook. But one other question I'd like to ask you, you talk about stop losses. I know I've put some stop losses under things, and sometimes you get the old whipsaw that goes down and comes back. And what percentage are you putting under your stop loss, if you don't mind answering that one as well? Thank you. I'll hang up and listen.
Sure. So, David, I'll answer both those questions. First of all, on Facebook. Facebook is in the epicenter of a big secular theme in social media. They have a tremendous platform, and they've got an unbelievable subscriber base. So the opportunity that they continue to enjoy is the ability to monetize all of that through advertising, through all sorts of other sources of revenue. I think you'll see them make a big push into payments and e-commerce, and that will be very successful also. They've made a great move into mobile. So this is a company I think almost every portfolio could own. I know it's not an inexpensive company, but they have a great opportunity in a space that continues to grow. They continue to beat the estimates quarter after quarter. And so sometimes when a stock looks expensive, it's expensive based on what people expect it to earn. And if they keep beating the estimates, it's not as expensive as it looked. So look, it's going to be a little bit volatile. But I think that this is a company that puts you squarely in the face of major change that's going on in the world. So I think it's one that's important to look at. As it relates to stop losses, it's always difficult when somebody says, what's the percentage? What percent below the price should I be using? And in many ways, I think you have to understand the personality of the security that you own, and they're all different. If you look at the personality of a utility versus the personality of Tesla, they're going to be two vastly different scenarios. So we use a type of chart called a point and figure price chart, which is an old-fashioned chart invented by Charles Dow back around 1900. And without going too deeply into it, it helps to identify inflection points. There's lots of ways you could do that. You could use a smooth long-term moving average, like a 150-day moving average, which would be a long-term trend indicator. But I think you have to look at each security, and ultimately what I want to see is higher highs and higher lows. And when I see a security make a high, a low, a lower high, and then a lower low, I'm out. Because ultimately it means there's more sellers than buyers, the pressure is coming from above, and it's time to go. So you have to try and identify those points on a chart, and it's probably a longer decision than that. But you have to look at each security, and what you're looking for is where the price moves beyond or outside of what has been the historical trading volatility that you've seen in the past.
Okay, we have David in Vancouver. David, what's your question?
Yeah, hi there. No, I was just wondering, I recently bought into Fortis, and I was wondering what your opinion of that stock is, and do you think it has any upside?
Sure.
Thank you.
So, David, we're operating in a world where interest rates are at 1,000-year lows. And there's a lot of investors who are looking for, not for volatility, but for some kind of security in return. And Fortis has had a great history over time of raising its dividend regularly. So when I look at the leadership themes in this market, we have one theme, which is economically sensitive. So transports and industrials and consumer discretionary companies are behaving really well. That's one theme. Second theme would be technology. That's technological change. Third theme would be yield. If you go through the world of ETFs, for instance, the best performing ETFs over the last year are low vol or high yield ETFs. SPHD is a good example if they wanted to put the chart up. And in a lot of those, you've got utility companies. And so a lot of people are buying utilities looking for yield, and I don't blame them because it's not likely that yields are going a lot higher in a hurry. So Fortis is a great way to do that. Emera is another, EMA I'd take a look at, behaving very well. And this is a theme that's not likely to go away. We've got the front end of the baby boomers who need income replacement. And so, a lot of the money we run is in an income fund. And the job that we have is to generate a rising stream of income, and Fortis is one of our holdings.
All right, we have Robert in Barrie on the line. Robert, what's your question for David?
My call. I'm calling about Electronic Arts. I know it was recommended last summer sometime, and it's dropped since then. I'd like to know your thoughts, and if it's a buy, sell, or hold. I'll hang up and listen. Thanks.
So, Robert, we like consumer discretionary. We like leisure as part of that group. So we have a number of travel companies that we're invested in. We have some gaming companies that we're invested in. And so Electronic Arts, I think, is interesting. Take-Two Interactive is behaving a little bit better, TTWO. But ERTS is likely to do quite well also. It's had a consolidation over the last few months.
Yeah, the street likes it as well for Electronic Arts. 18 buys, 4 holds, 0 sells. We're going to go to Joy in Stouffville. Joy, what's your question for David?
Good afternoon. Thank you for taking my call.
Our pleasure.
My question is on Visa. I see that Visa of late is not doing that well. Is it just because it's going with the flow, or is there more to the story? I'll hang up and listen to you. Thank you.
So, Joy, the big picture is that there is very strong growth in transactions, consumer transactions, especially online transactions, which Visa certainly plays a part in globally. So financial technology companies, and Visa and MasterCard would fit into this category, are part of that key theme. I think if you look at the market over the last 4 weeks, there's been a lot of money that's funneled into things that are maybe a little bit more economically sensitive. You've seen basic materials do a little bit better, industrials do a little bit better, transports do a little bit better. I would not ignore the financial technology theme. We're going to talk about one of these companies today as a top pick, and I think that realistically, it's going to be hard to hold this group back. So I would have no problem owning Visa. I'd have no problem owning MasterCard. I'm going to talk about another one today.
Street likes it for Visa. 31 buys, 7 holds, 0 sells. We're back with David Burrows. He's President and Chief Investment Strategist of Barometer Capital, answering your questions about North American large caps. So call us toll free, 1-855-326-6266.